What is up, sausages? It is the Money Sausage, and today we are joined by the editor, the one and only, the man that does all the magic behind the scenes. So, what are we doing today's video, and why is the editor joined with me? Well, today we're going to be diving into his investment journey, kind of why he wants to start investing, and then we're going to start talking about stocks that he is looking at possibly investing in, and then later down the road we'll make some videos about how to buy stock and how he's going to execute trades on Charles Schwab and Public. If you do want to join Public or Charles Schwab, be sure to check out the description down below, and that way you can join the journey. That way you can join the journey with us. And with that being said, please leave a like on the video and hit that subscribe button. It would mean the world to me. And make sure you give your 2 cents to that scholarship fund. With that being said, let's get right into today's video. So before we dive into the stocks and all that stuff, Daniel, I do want to ask, why is it you want to start, investing in this realm?
It's a great time to get into the market. We're in a recession.
Yeah.
Analysts are saying it's going to, start going back up in 2023, beginning of or end of this year even. But yeah, it's a good time to get in.
So you're thinking that this is more of an opportunist time to buy?
Oh, I'm an opportunist.
Oh, heck yeah. Okay. So what's your general investment strategy that after we make this video, are you going to start dollar cost averaging, or what's your plans with that?
Generally, yeah. So I'm going to be dollar cost averaging the S&P. Okay. Probably starting next week. So
obviously, so the plan is for the viewers, so y'all know, we're going to kind of set up the Charles Schwab account with Daniel to invest in index funds and Schwab-based Roth IRAs and whatnot. The stocks that we're going to be looking at for Daniel, I asked Daniel before we started recording this video kind of what he wants to get into, and he said technology because that's
the future. Tech is the present, tech is the future.
Yeah. So obviously I started looking into stocks with tech because obviously he cares about that. And frankly, when you're investing, if you invest in something you care about and something you know about, it's going to make your investment journey a whole lot easier. And so obviously I want to cater to that. But at the same time, with individual stocks, I wanted to make sure that he had some diversification within the stocks that we selected. And so, yes, there is tech, but then at the same time, it's not completely tech. There is some reliance on tech. And so as we go through, I'll explain a little bit more in depth. So we're looking right here on this screen recording of the Yahoo Finance tab, and we're going to go through each stock so you can see what I'm seeing. Now, the first stock we kind of picked was Netlist. So the basic story about Netlist is, as you can see here, right here on the Yahoo Finance news. I enjoy using Yahoo Finance as well as Public and their news articles attached. But as you can see here is they're in a major court case with both Samsung and Google because Google's search engine and their server-based technology is actually all a Netlist. So Netlist owns the patents to what Google is using.
Wow.
And so they're in a massive lawsuit right now. Now, as you can see here, obviously right here, the stock isn't doing too hot in today. It's just kind of being here. But if you look at the max, see there's some pretty high tracks right here. Wow. And right here is right when they kind of announced that, hey, Netlist is doing some pretty good. And obviously the court proceedings is kind of being washed into the news because Google doesn't want people to know about this. But it's a really cool thing. And Netlist is developing some new proprietary technology. And so that's why I think it's a great stock to buy into. And if you look at the analytics here, you can see a lot of people are saying, if you look at the revenue and then the earnings, it was pretty negative, but now they're kind of turning it around to where they're actually making some earnings this year. And if you see here, the analytics and the analyst of Yahoo Finance is saying it's a buy. So this is a good technology of one kind of technology, but server security, and then software development.
Yeah.
So does that kind of...
That's a great mix. Yeah.
Okay. So there we go. And then we're going to go in the next stock. And this is something that I use. And do you use this product at all?
Every day.
So kind of explain to me what is the appeal of Adobe and why you think you're comfortable investing in the stock.
Well, Adobe is becoming more and more of an industry standard for editing movies and TV shows. It's kind of like Avid Media Composer is the gold standard, but Adobe Premiere is more and more as the industry is getting more independently oriented.
Yeah.
Adobe's kind of supplementing. But Adobe's my favorite, so that's why I want to invest in it. And it's just, a lot of people love it. It offers a lot of things, not just an editing software. It's,
And obviously, like I didn't want stocks that were just technology based. I wanted there to be some diversification in the company itself. So Netlist is obviously a technology based company but is also developing some other things such as processors and whatnot. But Adobe, I use it for this channel, or when I was editing before we got the editor. I was using Adobe stock for stock music, stock sounds, and then I was using Adobe stock images for images, and then I was using that as well for like Photoshop and whatnot. But you use the whole entire suite for producing films and whatnot, from Adobe After Effects to Premiere Pro. Yeah.
But yeah, like there's full service. They have everything. Y'all, like if you want to be a filmmaker, you just need Adobe for post-production.
Yeah. And that's the interesting thing is, like, yes, they're very technology based and software based, but at the same time they also offer that physical product of stock images and whatever else they have to offer. And they're pretty reliant on their customers. Like if you have a complaint against Premiere Pro, you go and reach out to Adobe and they're like, okay, yeah, we'll get that fixed. Or we'll say like, hey, we'll get to the bottom of that, and here's 18 months free for you pointing out a problem. So it's a pretty good company, and we both stand by it and enjoy it. So that's why I wanted Adobe to be on his list of individual stocks. And as you can see here, there's a lot of strong buys in comparison to Netlist. If you look at Netlist's trends, it was just buys. And right now it's a lot of strong buys and a lot of buys. And then there's a couple holds. So in what the financial analysts are saying on Yahoo Finance is it's a buy. And it could even be over by the strong buy because it is down, we're down in the stock price, but that's obviously because of the recession. And as you can see here, the turn of the year, it kind of started tanking. So Adobe could have, a massive resurgence with stock price. And although it is $288, with that ability to buy fractional shares on public, it'll allow for you to buy into that stock, and hopefully if Adobe sees some gain, you'll be able to see gain. And obviously we'll make an update video later down the road about how your portfolio is going. Now the next stock is a pretty obvious pick, and it's Amazon. So obviously Amazon, the reason why I kind of picked this is because one, it's focused on, developing technology. So what's fascinating is with Amazon, I don't know if you know this, but Amazon, the vast proportion of their income and their revenue is actually not from Amazon.com, and it's from Amazon Web Services.
No, I didn't know that.
Yeah, so they're server-based thing in developing websites and hosting websites. Netflix is hosted on Amazon Web Services.
Oh, wow.
And that's where they make most of their money. So it's a very vast technology base, but also they have that marketplace to fall back onto. So if revenue falls under for AWS, they have Amazon Marketplace. And then they also have Amazon Prime. They're now developing movies. So they're becoming more and more broad in what they have their fingers dipped into. And so it is pretty diversified as a stock by itself. And as you can see here, like, it's a whole lot of strong buys, and it's a very high rated buy, and it even is over a buy and is closer to strong buy by the financial analyst from Yahoo Finance. So as you can see, like, yes, Amazon is down slightly, but with that being said, it's down from its peak, that's for sure, but at the same time, it also has that potential for a massive resurgence in the price. So that's why I picked Amazon. And then, so now we're kind of done with the individual stocks. Those are the kind of the technology-based but diversified stocks that we went with. Obviously, Netlist is going to be a long-term, and if they went out on the Google lawsuit and the Samsung lawsuit, there could be a massive resurgence. Some analysts are saying it could go all the way up to $90 to $900 from the stock price. So there could be some massive profit there, but at the same time, just anything in the green is what we're looking for.
Yeah.
Now for the index funds, ETFs, and mutual funds that we're looking at, the first one that I kind of wanted to bring to your attention is it does have some focus on technology, but it's also vastly diversified. And it's the Schwab US Dividend Equity ETF, which the ticker marker is SCHD, and it is a ETF fund that does rely on dividend. So at the same time, you're getting the net value and the net gain of the stock's performance, which right now it is down. But overall, this gain, you're getting the stock increase, but you're also getting percentage back on the stock you're actually buying. So if that makes sense. So you're getting that dividend. Now, as you can see here, the top holders are some really reputable companies such as Pfizer, Pepsi, Texas Instrument, Home Depot, Verizon, Cisco. So you have some companies in here that are very technology based, but at the same time, you got Home Depot, which is, when technology is getting expensive and whatnot, people start developing their own houses and whatnot. Yeah. So Home Depot stock increases. So that's a diversification there. And the Texas Instruments, when it comes to software starts becoming expensive, people go to Texas Instrument because they have cheap, calculators, software. It's not really that cheap, but it's just a good backup. Texas Instrument has software, but it also has hardware. So this has a really diversified chain of, companies, but at the same time, you do have that gain, the net gain of however the stock is performing, but you also have that dividend coming back into your pocket, and it's a 3.3% yield, which means you're getting annually, you're getting 3.3% back into your pocket or reinvested into the stock.
Sounds great.
So you can obviously see with the stock by itself, you can see a gain of 11%, which is roughly like 4% plus. So 4% for inflation plus 7% of capital gains. Yeah. And then you can also see 3.3% with the dividend. So you can see anywhere between 10 to 15, 14% in gain.
Gain is good.
Yeah, get the gains. Now, obviously, we're going into more diversification, and the next stock we're going to be talking about is also another ETF, but it's Schwab's U.S. Broad Market ETF. So it resembles the U.S. market as a whole. So if the market is doing well, then this stock will actually do really well and perform right alongside with it. So when you're in a recession, you're going to see falling prices, but when the market is absolutely exploding, you're going to see some really explosive prices with this stock. And it's pretty cheap to buy into. While you can buy in with the S&P 500 or another U.S. market index fund. This is $42, while others can be upwards of $4,000 plus. Yeah. So this will allow you to buy in. And it does have a yield of 1.53% back. So you also do have some dividends, but obviously on this kind of stock, you're going to be relying on the capital gains. Mm-hmm. But that's like, a little sugar on top, a little sprinkle. But this has some really good companies that obviously you being technology, like you like technology, it has some companies in here that we've already talked about. Yeah. And some companies that I'd possibly like seeing you add to your portfolio in the future. Mm-hmm. But it allows for you to buy into all those companies because those companies are down because of the recession. But at the same time, they're going to come back bigger than ever. And some of those holdings are Apple, which obviously is an amazing technology company, Microsoft, Amazon, Facebook, Alphabet Inc., Berkshire Hathaway, which is Warren Buffett's company, and they have real estate property, they have real estate firms, they have tax management firms, so they have their hands in everything, so they actually make a lot of money. Tesla, Nvidia, which is a hardware developer and a software developer, and then JP Morgan Chase, which is just a massive banking conglomerate pretty much, where they offer everything. So how do you feel about this stock as well?
I use just about all these companies.
Exactly.
So yeah, I'm all in.
So that's kind of what I'm trying to show here is that you can go after stocks if you're interested on technology, but at the same time, when you go after a certain category, you can go for a diversified companies that are within that category itself. So like Adobe is a technology company, but it's diversified. Amazon is a technology company, but it's known for other things. It's known for a lot of bigger things. Netlist is pretty much solely a technology company, but then at the same time, you can get even more diversified with ETFs, mutual funds, index funds with SCHD and SCHB. So obviously there's some growth potential here.
It's very exciting.
Yeah.
Very exciting.
You ready to get going?
I'm ready to get going, yeah. Let's get in.
So obviously when you're buying stock, yes, when you see red, it's a scary time and being in a recession. But when you start dollar cost averaging in a recession, it's when you can buy the downturns and you consistently buy up. You're buying more stock for that $20 or whatever you're investing for the dollar cost averaging. So in the long term, when you do see that return back to what it was before the recession, you're seeing a lot more percentage and you're seeing a lot more wealth and a lot more stock. in your portfolio. So with that being said, like I hope that kind of quells any concerns, or kind of it shows you kind of how to look at stocks and any analytics that are out there. And obviously, if you all want to see a more deep, in-depth dive into stocks and finance, please leave a like on this video. If this video gets to 1,000 likes, I will make sure I post a series of stocks watch list and stocks that I'm actually buying into. But with that being said, make sure you stay tuned, hit that subscribe button and the notification bell, because there will be more videos coming out in this series, such as how to buy stocks on Charles Schwab, how to buy stocks in public, and then even a portfolio update and seeing what stocks you're possibly even looking into. And with that being said, it is Money Sausage and the editor signing out. See ya!